Hey everybody, it's Ron from Ron's Basement. Thank you for joining me yet again today. I have a video for you about what I think is a kind of a unique opportunity within the precious metals mining sector. We've talked about, and a lot of people have talked about the fact that the precious metal mining sector, when compared to the general market and the general major indexes, that the precious metals mining sector is vastly undervalued by most any measurement. I'm sure you've read about that, and if you've done any type of due diligence and analysis on the kind of the financial statements, whether it's free cash flow or the health of the balance sheets, it's pretty easy to see that compared to the rest of the market, the precious metals mining sector is beaten to a pulp for some reason. And I'm not going to go down. I'm not going to bore you with that because if you've watched my previous videos, you've heard me talk about that kind of ad nauseum. The fact that that these stocks are just have really been beaten down, and it makes no sense. But I won't go any further on that. What I'd like to talk to you today about is within the precious metals mining sector, there's even some companies that, relative to each other, I think represent a huge disconnect. And for example, I'm going to compare Hecla Mining to Fortuna Silver. Now, full disclosure, I own Fortuna Silver. Full disclosure, I have owned Hecla Mining in the past, and I'm not real fond of Hecla or their management, to be honest with you. I don't know them personally or anything like that, but I've grown kind of sour towards the management of Hecla Mining. It's like, do they ever make any money? you know, and they've made some. Nobody's perfect, right? Like I said, I don't know these people personally, but they've made some decisions in the past that cost me, which probably explains why I don't like them so well on a business level. But I do love Fortuna Silver and think very highly of the management there. But I want to compare these companies in terms of kind of more financial metrics. And I discovered what I think are some pretty interesting things. When you compare Fortuna Silver post Roxgold, they merged with a company called Roxgold, and that won't be reflected in their financial statements until the third quarter. But if you kind of extrapolate what the second quarter numbers would have looked like had they reported them on a consolidated basis from like a revenue perspective, especially for the quarter, based on my calculations, Hecla and Fortuna would have had roughly same ballpark in terms of revenue. But from a profit perspective, Fortuna just killed them. I mean, Fortuna's last two quarters have made some really solid profits. And on a per share basis, it's been great. On a pure numbers basis, it's been great. Their cash flow has been great. Whereas Hecla, I think they've made some profit, a little profit, but like I think over the trailing 12 months, the company's made like 30 million total in profit. And that leads me to my next point. Hecla is a $3 billion market cap. Okay. Fortuna is a $1 billion market cap. And that's after the consolidation with Roxgold, the merger with Roxgold. So it's crazy if you think about it that you've got these two companies with roughly the same revenue. They're both in the precious metals mining sector, producing about roughly the same number of gold equivalent ounces. But you've got Hecla with a $3 billion market cap and Fortuna with a $1 billion market cap. Now, there's probably a couple of reasons why that's the case. The merger just all happened here in the last 2 or 3 months. That always creates some turbulence. There's new shareholders. People are uncertain. The other big elephant in the room when you're comparing these two companies is jurisdiction. Hecla is mostly North America with, I think, some Mexico. I'm not as up on them as I used to be. Whereas Fortuna is kind of the poster child for what a lot of people would consider geopolitical risk. They are in Mexico, Peru, and they have a huge mine in Argentina. And they have the Rox Gold acquisition now has brought them a big mine in Africa, and they're most likely going to be building another big mine in Africa. So, the jurisdictional risk is probably part of the reason why there's such a big disparity in the market caps of these two companies. But remember, Fortuna is making more profit. They're both generating about the same amount of revenue. Fortuna is generating significantly more profit. Honestly, I didn't look at cash flow, but I presume more cash flow. And Fortuna has a much more attractive growth profile going forward. They have this huge mine in Argentina, Lindero, and they've been in the process of building it for, seems like, I don't know, the last 2 or 3 years. Look, before COVID, it was a challenging mine for them to build. It went a little longer than expected. It's in a very somewhat isolated part of Argentina, so I think just getting people there at times was a challenge and whatnot. But the mine is now up and running. Unfortunately, it really started to get up and running right as COVID hit, and Argentina has been hit super hard by COVID. So not only has that directly affected the mine, because they had, like, I think I calculated almost 20% of their days in Q2, the mine was shut down because of COVID, directly, people getting COVID on the mine site. But also, it's indirectly affected the ramp up because they can't get outside consultants and support in to help them kind of fine tune a lot of this complicated machinery that they installed to help crush the rock and spread the rock out on the leach pads. So they've got this big mine in Argentina. Despite those challenges, it has done pretty darn well and is generating positive cash flow. And, look, COVID's not going to last forever. There's a big runway for improvement still, even at Lindero, okay? Also, you've got the African mines that are very profitable, and they have a new mine they're going to be building in Africa. So as you look out, there's a big, not only is Fortuna kind of beating Hecla in the profit area right now, but if precious metals mining or precious metal prices even just remain where they are, and Fortuna does what they've always done, which is deliver on their promises, you're going to see higher production and even higher profits, higher cash flow. If we get a higher precious metals price, that could even create an exponentially better situation. So that's my thought. I just was really surprised when I compared those two companies that Fortuna is selling at such a discount to Hecla Mining. No offense, but I think the inverse could be true. I know there's geopolitical risks. I know that they spent a great deal of time assessing that. Fortuna did during their due diligence process with the Rox Gold acquisition. Sure, but there's risk in the anywhere in the United States, Canada. I mean, there's a certain level of risk anywhere. And one thing that I've heard Jorge say, he's the CEO, Jorge Ganoza of Fortuna. One thing I've heard him say that I hadn't thought about is the fact that these African countries are pretty poor. And as opposed to like the United States or Canada in a lot of instances, these African countries really need mining. So they are, it's a big deal for them when a mine gets built, from a jobs perspective, from a tax perspective, whatever. So they want mining. They want these companies to come there. Sure, there's risk, right? But I hadn't really thought about that. That like, boy, they really, they want these companies to be comfortable coming there and building mines and providing jobs. So anyway, sorry I rambled on. And if you have no interest in Fortuna Silver and you're still watching, I apologize. I didn't provide you with any better content. But if you did like my video, if you could like it and share it, I sure would appreciate it. This is Ron from Ron's Basement signing off, and I hope you have a great day.